Gold is already above $5,000 an ounce in early 2026, and most bank forecasts are totally wrong. So the real question is, where can gold actually go from here? $6,000, $8,000, even $9,000.
In today's video on Gold Price Update, I'll show you a realistic gold price roadmap for 2026 based on hard data, central bank buying, ETF flows, and investor demand. Not hype, not guesswork. Watch till the end because I'll also show you a historical pattern that suggests this bull market may not be finished yet. Let's get started. Why gold already shocked Wall Street? First, we need to understand what just happened. At the start of 2026, gold has already broken through the $5,000 level, smashing most big bank predictions that expected much lower prices for this year. Many analysts thought last year's rally was overdone, but instead we're seeing exactly what you expect when demand explodes while supply only grows about 1 to 2% per year. When demand jumps and supply barely moves, the price must adjust upward. Now let's break down the three demand forces that actually move the gold price. The three real drivers of gold. Forget the headlines for a minute. For monetary and investment demand, there are three big forces you have to watch. Central bank gold buying bars and coins, physical investment demand, gold ETFs, and similar financial products. I'm going to ignore jewelry and industrial uses here because those are more stable and don't drive big price spikes. First, central banks. For years they were net sellers, especially through the 1980s and 1990s, which helped keep gold in a long bear market. But since around 2010, they've flipped and become consistent net buyers. On average, they used to buy around 500 tons of gold per year. In the last few years, that number has roughly doubled to over 1,000 tons a year, especially after events like the freezing of Russia's reserves. That told a lot of countries, your foreign exchange reserves can be weaponized, but physical gold in your vault cannot. Second, bars and coins. This chart looks more boring. Demand moves up and down, but nothing crazy if you look at it alone. The real story comes when you combine it with ETFs. Third, gold ETFs. During the 2008 global financial crisis, ETF inflows hit record levels. We saw something similar in 2020 during the COVID shock. After that, there were several years of outflows. People thought it was a risk-on environment again. But in 2025, that completely changed. We saw massive inflows into gold ETFs, even bigger than the 2008 crisis and close to COVID levels. Absolutely crisis-style demand. 2025 demand spike and what it means for 2026. When you overlay central bank buying bar and coin demand and ETF flows on one chart, something jumps out. From roughly 2010 to 2024, total monetary demand is fairly stable around a trend line. Then 2025 hits, and the combined demand shoots up to a record high. Depending on how you measure it, total monetary demand in 2025 jumps more than 60% above the long-term average. Supply of new gold only increases 1 to 2% per year. That gap between demand and supply has only one way to close: higher prices. That's exactly what we saw. Gold delivered a huge return in 2025, and silver did even better in percentage terms. So the natural next question is that spike over, or is it the middle of something bigger? Why investors are flocking to gold? Ask yourself for each of these factors. Will this be stronger or weaker in 2026? Sanctions and geopolitical risk. Wars, interventions, and financial sanctions are not calming down. Sovereign debt and huge fiscal deficits. Governments keep borrowing more, not less. Bonds no longer feel risk-free. Investors are questioning the idea that government bonds are the safest asset. Pressure to cut rates and tolerate more inflation. That erodes the real value of paper savings. Physical tightness and scarcity. When more people chase the same limited physical gold, it creates a bank-run style feedback loop. The more scarce it feels, the more urgently people want it. When you stack all of this together, it explains why both central banks and private investors have been piling into gold. It also explains why the bull market doesn't look finished yet. 1970s bull market comparison and 2026 target. Now let's put today's bull market into historical context. In the late 1970s, gold went on an incredible run. In 1979 alone, gold gained over 100%, roughly 120% in a single year, and silver rose more than 400%. Prices then pushed even higher into 1980 before finally crashing back. In other words, there is real historical precedent for gold more than doubling in a year and silver doing multiple hundreds of percent. In 2025, gold was up around the mid-60% range, and silver did more than double. That combination suggests we might still be in the rising phase of this bull market, not the end. One way to visualize this is to overlay the current gold bull market on top of the 1970s bull. When you adjust for scale, the current red line tracks the old blue line closely. As of the latest price, just over $5,000 an ounce, this pattern suggests we might be around 80 to 85% of the way through the vertical move if this cycle behaves like the 1970s. In the 1970s, the final peak was just under $875. If you scale that final move to today's cycle, you get a potential target area just below $9,000 per ounce, around $8,700 to $8,800 before the end of 2026. Is that guaranteed? No. But from a pure pattern and supply-demand perspective, it is not outside the realm of possibility. Clear message to your viewers. So what's my base case for 2026? Given the record monetary demand, tight supply, and the way previous bull markets have behaved, I expect 2026 to be a stronger year for gold than 2025 in percentage terms. A full doubling from here is aggressive but still within historical precedent. Silver could easily outperform gold again in percentage terms if the bull market continues. To be clear, this is not personal investment advice. Every investor needs to consider their own risk, but the data points to a powerful trend that is not finished yet. Before you click away, let me know in the comments, what's your gold price target for the end of 2026, 6,000, 7,500, or do you think we actually touch 9,000, and are you more bullish on gold or silver right now? If you found this video helpful, hit like so more people who follow gold can see it. Subscribe to Gold Price Update and turn on the bell, because in my next video I'll break down realistic silver price targets if gold keeps climbing. Thanks for watching, and I'll see you in the next update.